Welcome to TradeTheNBI.com. This is John. This report is for the 26th of October. And well, we can see that Thursday's action tried to pull back into the previous range, but hit the 23%, got rejected. We can see that we still don't have any buy configuration as of yet. Short-term buyers have popped back in to kind of support this up at the elevated area, but this is a continuation of the downturn, actually. Even if steel crosses in below cyan, then you get much more of a continuation factor from it. We are reaching kind of a bounce back area when we get to this super negative 20 range, seeing that on the green. What's interesting is now we're making a lower low on higher extremes. Unless this extreme starts to dip below the red, we can see a decent pop back within it. It's not going to take much for midterm buyers. It may not be until the beginning of next month. Gotta wait for new money to come in that would drive this, or a significant amount of short covering, which would probably take place closer to that 27.36, getting back into the algo range. As it stands now, though, any turn up of orange and a drop of steel and we'll break into new lows easily. NASDAQ, similar but not as oversold as we see from the S&P, so there could be a little bit earlier support, so I think the NASDAQ would be the one to watch as far as any turnaround. The breakdown in the euro, not a surprise given what we were seeing from the budgetary issues that were developing, and it was sort of clear that they were trying to hold the line, and then just too much selling within the U.S. to support where it currently was, and it's not really that horrible, except for the fact that you do have steel staying above the cyan right here that could give it a little bit more support. You're going to get a de facto cross, which is where you have like red falling and midterm buyers sort of like overtake it just by virtue of the decline. That usually just leads to a little bit more sideways action. And of course, Treasuries still become the place to go for relief, but even still, any buy configuration that was set up within there was killed when that orange came back above. We would expect that to break below some of those ABM values. And oil, just holding in this pattern at this particular point. I think this has been a pretty consistent range. If you kind of like put your line through there, you can go back. It goes quite a way back into time for this. So we're getting little deviations above and below, but pretty consistent right in a similar range. And gold still within a buy configuration, though it has expressed its weakness here with the short snake developing. So it may get a little bit more of a move back towards the ABM yellow, get a little relief, and whew, yeah, that shows the day's range from Thursday, and very active. A lot of good action, kind of marked where we would see our typical short signals, return buys. A lot of times these dips that come around, I don't have an issue with covering some of those, particularly if your shakeouts move to a significant improvement. And we come along with quite a few others, particularly when you get significant crossover points. For me, on some days, I kind of mark them in blue, like here, where it wouldn't necessarily be a turnaround to go long as much as just to cover a large portion of the short, particularly when it matches previous algo areas, and you get kind of a support take place. And in this particular case, you have the orange dip. You'd already had the green, and you had that dip below that kind of gives you that general pop. And even here, you can see it happened again in the post-market. Still within the broader short run here of steel, maintaining it doesn't get me excited about covering unless I'm over the 23%, which you finally got in the second up pivot that's taking place right about here. So it was a lot of damage in that shakeout that it's got to get recovered, and once we moved above the plus 13.5 is when we moved above the 23% right there. And I can enlarge this now, make it a little easier to see. And when you move out, you can see the significant range that we're talking about here. I mean, you're looking at from, the 27, 20-ish range, 27, 18, all the way down to 2650s. So that's quite a significant move. We're all the way back from 57 here at the low, all the way up to 74. So even within this pre-market, you can already see a significant amount of action has taken place, and pretty much we've come back to the previous 23% was right about here. We would expect it to kind of try and press up towards that. Still haven't gotten above the negative 7.5. We're seeing a little bit of a battle right here at this particular point. If orange continues as well as sign, you're going to get a spider, and that should lead to another pullback, so to speak. Getting some yellow candles, almost extremes, but not quite there, and those usually tend to have a little trouble going forward. But I think the action's pretty stable. It's very clean and consistent within our expectations, particularly when you see these previous extreme histogram lines and they turn out to be breaking points. In this particular case was a little interesting one because you had the short spread start right there from above, but the green is quite a bit above the red. You could wait until it actually breaks down below it, but anywhere from this point on, you had fairly decent. It's just it consolidated for a little while before it finally just collapsed, and there was no change in the continuation with that steel all the way up. The only positive mode you had was right about here, where it broke above, but at that point, orange was just stuck in the middle, and there was no turnaround of green, and that just makes it easy to follow. Either the 38 or, in this case, long algo works as well, and then it sort of ties in. It stays out of the action a little bit higher than the 23% does, and that's just because of it's recognizing the readings, and then it corrects down to the 23 and trails it from there, and we just finally moved above it just in this last bar before right now. And that's obviously, you can see that causes some short covering, gives it a little bit of a boost. But really good ranges, and I love this ATR. This is where I like to say that you can have a couple-week period that outperforms the entire year just in a very short run. And there's been both plenty of longs as well as the shorts. I mean, even when this one moved above the 23%, 26.99, took it all the way up to 27.17. These are significant moves that are not complicated to follow using the ABMs and that. And in my particular case, I like representing it with the Morganacci lines, because in this particular case, that 61% comes a nice ride. And particularly when I make new highs, then I'm able to adjust accordingly and can pick the ranges in between and pretty much stay consistent with it. And the 61 started to accelerate. And then once you get into that move where you're starting to make these positive extremes, I usually move up to the higher, just so that you don't get too far behind. The issue comes is that when the ABM moves above the 76%, then it provides a little bit more of a range play. Depends on whether you want to be more active in shorting or tighter stops. Becomes flexible, and I'm usually looking for the point where I can start to see some kind of transition. In this particular case, we had the complete reset right here, so there was no real short activity developing until we ended up with that DOC spread that took place right here. It was a very soft one. You can see it didn't work, and the difficulty of it was because you have this closing snake, which I refer to as the orange starting to come down and steel card starting to come up, and it sort of creates a little pincer move. And that's what created the double top configuration there. And in this particular case, it's split apart, but you didn't get the green below red, which typically you kind of want, or in this particular case, what I look for is that first red decline, even if the green hasn't crossed below, and that's why I marked that one there. And that began the cascade. Waiting a little longer gives you the DOC spread, or even just that break of the ABM once the DOC spread is clear enough. And sure enough, that led to a nice move. As always, though, I will keep posting updates and probably be sending out indicators that getting them ready for the beginning of next month a little early so that everybody's set to go ahead of time. As always, though, trade well. Keep looking at the Skype chat. I put up a lot of these charts with these lines and stuff to give you a heads up on things that I like to look for. But most important, I like you to notice these patterns repeating themselves so that builds that confidence that you can just go with it despite what price does sometimes. And that certainly can be helpful when the volatility is a little bit bigger and the candle ranges can be a little larger. We'll talk again soon. Trade well.